Good evening. India is not shining, and the fact that the sheen has come off has been quite apparent for some time now. Lowered growth targets, industrial production on the wane, inflation hitting the roof, and the currency depreciation that we saw this year and the previous year are all indicators that the optimism that the India story boasted of during the boom years throughout the 2000s is also wearing off. An increasing number of economists have predicted that the trajectory of the Indian economy will be far lower than what we experienced in the sunshine period, namely during the decade after 2000s. Most analysts also agree that the shift will have important implications in areas such as monetary policy, corporate earnings, consumer demand, employment, and government revenue collections. The government, however, is standing fast on the stand that the growth rebound is about to happen. Reports have suggested that the Planning Commission might lower its growth target from the earlier 9% to 8.2%, and that's also a figure that most economists say is far too optimistic given the current circumstances. Recent studies, most notably by one American think tank, claims that the lack of optimism is widespread among the citizens of the country as well. The study says Indians have lost more faith in their country's economy and its future than other nations over the past year. The economic reforms initiated in the 1990s benefited a lot of large groups of people in the country and was to a large extent the basis of the aspirational India that excelled during the boom years. But the UPA government's inability to carry out the next generation of reforms has hit the economy hard. Ladies and gentlemen, tonight on The Big Picture, we take stock of the situation as it stands now and also explore various blueprints or policy prescriptions that can get India out of its, let's call it India's economic ennui. Before I introduce my guest tonight, we filed a small story on the recent IIP numbers that just came out. Take a look before we go on to the chat. India's industrial output grew by a marginal 0.1% in July from a year earlier, reversing June's 1.8% contraction. A recovery in consumer non-durable sector helped the IIP growth in July. However, manufacturing, which accounts for over 75% of industrial production, contracted for the second straight month. According to data released by the government, the growth rates in July 2012 over July 2011 are 1.5% in basic goods, 1.4% in consumer durables, 0.1% in consumer non-durables, with the overall growth in consumer goods being 0.7%.
I think this very small tiny movements from one quarter to the next or 1 month to the next, one should not give too much weight to it. Yes, it does indicate things are not getting too bad or not getting worse. Maybe it's turning around, but that's perhaps just wishful thinking.
The latest economic report offers little respite for the government. With the economic slowdown beginning to bite India's middle class, Prime Minister Manmohan Singh faces the uphill task of reviving the economy before his government faces the polls in a series of state elections starting this year and leading up to a general election in 2014. With Rahul Kapoor, Athar Khan, RSTV. Dr. Santosh Mehrotra joins us tonight. Dr. Mehrotra is the DG, the Director General of the Institute of Applied Manpower Research, also working closely with the Planning Commission. Nalin Kohli from the BJP also joins us on the program tonight. Mythili, bhusnurmath, consulting editor of the Economic Times, is also on the show as well. And in the studio tonight is Gautam Mahajan, former president, of the Indo-American Chamber of Commerce. Welcome to the show, everyone. I'd like to start with Dr. Mehrotra, if I could. Dr. Mehrotra, let's start with the IIP numbers. July IIP grew by a marginal 0.1%, marginal growths. And this, when we keep hearing from your friends at the Planning Commission and the advisors in North Block that recovery is imminent, we will start doing better soon, etc., it's just a matter of time. Do you still think, Dr. Mehrotra, that a growth rebound is imminent?
Yes. Short answer is yes.
What's the long answer, sir?
Please recall that growth is, I'm coming to the long answer. The growth is driven by investment. And we've had a period of good investment all the way up to the end of the 2000s. Please recall that the 12th plan just started and the finance minister has focused his attention on infrastructure investment. The finance ministry is just about to get cabinet nod for rupees 80,000 crore worth of investments in infrastructure. 80,000 crores is nearly 2% of GDP. Please recall that we ended the 11th five-year plan by meeting the target of $500 billion of investments in infrastructure. In other words, nearly 7% of GDP. The 12th plan is planning to take this investment in infrastructure to something like 10% of GDP, doubling it from the $500 billion of the 11th to $1 trillion. And what I'm saying is the FM is already taking 80,000 crores worth of investments in infrastructure to cabinet. So in other words, what will happen, as happened during the 11th plan, as these public investments begin to flow, is private investment will be pulled in, which is precisely what happened during the 11th plan period from 2007 to 2012. Private investment was supposed to account for 30% of total infrastructure investment. We met that the private sector met that target. In the 12th plan, we expect that 50% of infrastructure investment will be met by the private sector. And it's Keynesian economics, sensible, straightforward, that when the public sector invests, private investment is pulled in. That's point one.
Right.
Investment drives growth. Point two, that fiscal consolidation is now on its way. There's clear evidence that fuel prices are likely to be raised this week. In other words, what has been happening is that fuel prices have led to under-recoveries, which has prevented the finance ministry from holding down the fiscal deficit.
Dr. Mehrotra, I'd like to get another opinion right now. You made your point. I'll come back to you very shortly. Mythili bhusnurmath is also joining us.
No, I just want to close by making one sentence, Athar.
Very briefly, sir.
One sentence, Athar, just to say, very briefly, because investment is happening, fiscal consolidation is beginning. Very shortly, you will see the right sequence. In other words, monetary policy will also ease.
Right. Mythili bhusnurmath, you heard what Dr. Mehrotra had to say. He thinks the government is doing enough. He thinks the finance minister is into overdrive. And he also thinks that growth rebound is imminent. Are you as positive and as optimistic?
Not at all. In fact, I couldn't disagree more with Dr. Mehrotra for two reasons. A, he's very optimistic about the kind of growth that we're going to see, saying that public investment during the 11th five-year plan was so robust. Then my question to him would be, in that case, why has growth slowed down so dramatically, number one? Number two, we've heard a lot of rhetoric coming out from the finance ministry, but we haven't seen any sign of fiscal consolidation happening yet. And it's not only a question of cutting the subsidies in the case of oil. There are many other areas where expenditure has hugely overshot the projections that were made during the budget. At the same time, with growth slowing down, revenue is also going to slow down. So I really could not disagree more with Dr. Mehrotra. I would like to see more action on the ground, more concrete results, and only then can we say that growth is going to kind of pick up again, particularly because the global economy, the external environment is far from friendly.
Right, Mythili. I'll come to Gautam Mahajan in just a moment. I want to get Nalin Kohli in first. You heard both the previous speakers. Would you tend to agree with Mythili or Dr. Mehrotra? I have a sneaking suspicion that you're going to go with Mythili on this one.
Athar, that's really a very easy one, and you don't really need to be Sherlock Holmes to judge that. Certainly, I think Mythili has summed it up very briefly and very accurately, and I'd like to take the discussion forward from there only. I think, you really have to speak on facts, and sentiments alone can't keep it going forever, and nor can statements. Let's look at the hard facts. You have a situation where GDP growth is very low, you have inflation consistently high, and food inflation has been on a record almost 42 months above 10% as per the RBI. You have very high interest rates, which is hitting manufacturing and a host of other sectors. You have housing, infrastructure, shipping, massive employment generating and core industries in a mess, and they are crying for help. And every day you pick up the paper, you will see someone going for CDRs, basically their debt restructuring, because there's a lot of crisis in industry. And it's funny that you have a monetary policy that is constantly speaking about high interest rates to control the demand side, and on the other hand you have in manufacturing which is either in the negative or marginally just out of the negative. So I think the crux of the point which I'd like to make is that when Indian investment or Indian investors, Indian business houses are looking at parking funds internationally and projects out of the country, I think that speaks terribly on the government and the sentiment here. Forget about getting foreign investment, which in any case newspaper and magazines, whether it's Time, Washington Post, International Herald Tribune, New York Times, Independent, Financial Times, there's a series of it only criticizing policy paralysis, the mess that the economic condition is. And I think, sentiments can't drive it. We need to see action. That doesn't seem to be happening for the last 8 years.
Right. Gautam Mahajan is in the studio with me. You've heard the politician and the bureaucrat and the journalist. What is the industry perspective on all of this?
Well, I'm not going to talk about the industry perspective per se, but I will come to it. But the best is yet to come. I think we are seeing a slowdown. I think there is a fair amount of reduction in demand, and that is mostly because of inflation. People just don't have enough money to buy goods, and so you've got to anticipate that. And if oil prices go up, inflation will go up, and therefore you will find that people are not able to buy as much. But I've just come from the 8th economic Indo-US Economic Summit. People from large companies have shown their confidence in India. They don't seem to be bothered about this slowdown. They're used to this kind of thing. And in any event, in a country like India, we need to be able to do things ourselves. Our industry needs to reinvent itself. Today in Mint, there was this article about Ford saying they're going to continue to invest. There was this article about the metro in Gurgaon, but the train has come from China. Where are we in doing these things? Why aren't we investing in these things? And it's not maybe the right answer, but one of the things that's happening is that the industry has gotten so used to being pampered and manipulated and manipulating the environment and the government and things of that sort, that they're no longer able to reinvent themselves. And we have to do that. We can't keep saying government.
Well, we take your point. So you're basically saying that the industry can't keep asking for SOPs and stimulus. I'll come to you, Nalin. Just give me a second. But industry needs to reinvent itself and do something for itself. I'll come to Mythili first, Nalin. Very quick question on manufacturing before I come to Nalin and Dr. Mehrotra. Manufacturing, Mythili, has hit a snag. July numbers show that the rise in IP was marginal, and that probably was because the shining star of the Indian economy, the two shining stars, of course, services and manufacturing. Manufacturing has disappointed. Is the manufacturing sector in trouble as well? Very briefly, ma'am.
Don't forget agri.
Yeah, very seriously in trouble, and we need to find manufacturing growth fast, because that's where the jobs are going to come from. If you want to move people from agriculture to any other sector, it has to be in manufacturing. And with manufacturing slowing down, it is a very grave sign for the Indian economy.
Right, Mythili. Let me come to Dr. Mehrotra first before I come to Nalin. Let's talk about the research poll that's everyone's talking about. This American think tank that came out with a study and a survey. 80%, Dr. Mehrotra, of the respondents in the Pew Research Center poll were of the opinion that unemployment followed by rising prices were the most compelling challenges that the country faces at the moment, underscoring the latent worry, of course, about an underperforming economy and inflation hitting the roof as well. For you, Dr. Mehrotra, personally, is inflation a bigger worry rather than a growth revival at this moment in time, or is it the other way around?
No, of course inflation is a worry, which is precisely the reason why the RBI has been maintaining interest rates at the level at which it has been. But what I was saying, not one of your speakers actually contradicted the facts about investment. I'm not saying the investment rates have not declined in the last 3 to 4 years. But what I also said is that we are beginning to see real change within the last month itself in terms of the policy paralysis ending. If you had interviewed me 1 month ago, I would have echoed precisely the kind of sentiment that some of your speakers have spoken. But what has reassured me within the last few weeks is the following point, which I'm going to reiterate, that 80,000 crores worth of infrastructure investment are being pushed by the FM, by the finance minister, and about to receive cabinet nod. I'm not saying this is going to have an impact immediately in financial year 12-13. It will, however, have an impact 13-14.
Right.
And no one can deny that public investment in infrastructure pulls in private investment. And I agree with my colleagues that action on fiscal consolidation has not begun. However, for the first time, we finally got clear statements from the Petroleum Ministry that fuel prices are set to rise.
Right.
So in other words, the penny has dropped even in the So what I'm saying is that together with the investment, together with the fiscal consolidation signaled by the rise in diesel prices, what will happen in 2 months' time, my suspicion is that the RBI will begin to reduce interest rates.
Point taken. I'll come back to that.
I'll come back to that. But there is a sequence here. In policy, there is always a sequence.
I'll come back to that. I'd like Nalin Kohli to respond to that.
I have 3-4 things to point out, and I'll pick it up from the last discussion, what Dr. Mehrotra is saying. First of all is the minute you're going to raise prices in fuel products, you're going to push inflation further. I mean, that's really an obvious outcome. And that's going to, raise questions when you have high inflation and you're already pushing it. How is it going to impact the monetary policy? And that's going to be serious. Second is, I think it's fascinating that Dr. Mehrotra himself is accepting that there has been policy paralysis in the government. And in the last 1 month, he's encouraged. So it begs the question, what was wrong with the government for 8 years preceding this? Why the reason for policy paralysis? And how do we expect to get out of the mess created over 8 years in the next few months? The third point I'd like to point out is that, you're talking about infrastructure investment. I think you need to just look at the performance of what the government has been on, say, highways. I mean, when the NDA was doing 8 kilometers, big proclamations have been throughout the tenure of the UPA that, 20 kilometers a day would be built. You've been doing 2 kilometers, 3 kilometers. So, I mean, what has prevented the government from doing that?
Right.
And, so that's and really that's an important question.
All fair
and
question.
Last point I just want to make is on the manufacturing sector. I think Indian manufacturing sector has to be credited for being able to survive despite all of this. High diesel costs, no electricity, no help from the government, high interest rates. And I think if you really are surviving still, it's great credit to the Indian manufacturing industry. And we have to understand how well they could do if the government had provided a conducive environment.
All fair points, Mr. Kohli. We'll take a small break right now. I will come back and we'll talk to Mythili and Gautam Mahajan about reforms and the so-called policy paralysis of the government. But that's after the break. Don't go anywhere. Keep watching The Big Picture. Welcome back to The Big Picture. Let me come straight to Gautam Mahajan and then ask you this. First of all, reforms or the lack of reforms, should I say, you must agree, played a huge part in the so-called pessimism that we are seeing or experiencing today. I've asked you this before and I'll ask you again. Is there any chance of a revival in growth without, let's say, the most important of reforms? Let's take FDI and retail, for example. Without them coming into being, do you see a shot at growth revival at all?
Well, first I want to say that I agree with Nalin about industry having to battle high inflation and high interest costs. I think without reforms, 2 or 3 years ago we were getting 8%. And suddenly reforms have become the reason why we are at 5%. That's not the reason why we are at 5%. Certainly reforms will increase our growth, but it's not the reason for our growth coming down. I think one of the main things that we ought to fight is pessimism. We have to build consumer confidence. We have to build business confidence. I mean, we talk about Vodafone. We talk about this. We talk about how bad things are in India. You go to China. No one in China says, don't come to my country because there's no legal system. Don't come to my country because this is wrong or this is wrong or this is wrong. First, we have to look at the positives. And when we start becoming positive, we will find that many things will start to come into the right way.
Right. Let me get Mythili in on it. Mythili has been waiting patiently for a while now. Mythili, your thought on how good a chance we stand to revive growth without the possibility of reforms coming into action. Briefly, then I have another question for you.
Athar, if I could just respond to Mr. Mahajan's statement that in China nobody criticizes the government. I think that's because we have an entirely different political system here. Thank God here we can speak freely and there is complete freedom of speech. So I think that is a very important factor why you don't see pessimism in China.
Right.
And maybe you see, if not pessimism, at least some straight speaking in India, plain speaking. As far as growth is concerned, I think we must understand that there is no magic bullet. You can't really just tweak reforms and do something dramatic. Even if you were to announce FDI in retail, that would not really bring in a dramatic turnaround because these things happen very slowly. And unfortunately for us today, there is no international capital, large quantum of international capital looking for a place to invest. And on the contrary, despite the very poor status of the US economy, the US still is seen as a safe haven. So unfortunately for us, I think we must accept that there is no magic bullet. It is a long haul and we have to grin and bear it. Okay. And as for interest rates, if you look at the RBI, they've clearly stated that real interest rates today are much lower than they were in the boom period. So far from thinking that real interest rates are high, interest rates on the contrary, in terms of real interest rates, are much lower. So the fault really, whatever the problem is, lies beyond monetary policy. The ball is clearly in the government's court.
Right. Mythili, I'll come to the monetary policy and the RBI in just a bit, but it's interesting you mentioned the US. I have a question related to the US. In the same survey, the Pew Research Center survey, respondents have said that the people in the US are far more optimistic about a turnaround, far more optimistic than we are in India apparently. And this is when the unemployment numbers in that country are at an all-time low. The current incumbent, Barack Obama, has failed to deliver on his job creation promise. That hasn't happened as well. So why do you think the US is far more optimistic about its chances, even though India handled relatively better the economic crisis than the US did?
I think there's one very important factor when you compare the US and India. The fact remains that with the US dollar being the international reserve currency, the US can pass on a lot of its economic woes to the rest of the world. The rest of the world takes policy and the US basically dictates it. That advantage we don't have. So I think that perhaps may partly explain the US optimism. Though of course the US economy has recovered to some extent, and let's not forget there's one major change that has happened in the US in the recent months. That is the discovery of vast quantities of shale gas, which raises the prospect that the US might, just might become self-sufficient in energy, and that makes a huge game changer.
Very interesting point. Dr. Mehrotra, I'll come to you first, then I'll come to Nalin Kohli. I think he has a point to make, but Dr. Mehrotra first. Do you also think, sir, that some people have opined in newspapers and publications very recently that the situation in fact is not that bad and Indians have a tendency towards extreme mood swings in the national mood? In other words, what I'm trying to say is when the going is good and the economy is soaring, we tend to swagger a little more than we actually should. And the moment a tougher set of conditions that have hampered us slightly, the mood has darkened to more than what is actually required. Would you agree with that assessment?
That mood swing with our cricket team.
That's for Mehrotra.
Yes, I would agree with that agreement, that statement for the following reason. Please understand that from 2003-04 to 2010-11, we were growing at 8.4% per annum despite a global economic crisis in 2008. So we rode that through extremely well. I want to remind my friend from BJP that between 2003-04 and 2010-11, we've grown at 8.4% per annum on average. Now, as far as this comparison between the mood in India versus the mood in the USA, please remember that obviously the potential for growth in India is much higher. It is true that our growth has dipped in 11-12 and is likely to be somewhat lower again in 12-13, but because the potential is that much higher and we've been riding a wave, riding high for about 8 years, it's not surprising that there is a certain, dampening of sentiment. However, as I'm saying, and I'm repeating myself here, that with public investment, in infrastructure happening, private investment is going to be pulled in, and that's what's going to continue to drive growth. Now, on reforms, I must say that I do agree with my friends on the panel that we should not expect too many reforms between now and May 2014, because after all, this is election period and there are all kinds of contentious issues in place. However, if we do manage to put the land acquisition bill and the rehabilitation resettlement bill through Parliament in the next session has been wiped out, I really sincerely hope in the interest of the country that goes through, because that will also give us very important signal to industry, private industry in particular in our country.
Right. Dr. Mehrotra, Mr. Kohli, we have a paucity of time, but I would like a reaction from you on what
Yes,
Dr. Mehrotra
I'll make it
said.
very brief. I'll just simply say that, I think Dr. Mehrotra would also understand that its policy is not something that changes things overnight. It's a continuum. And during the 97-98 period, also we had a nation currency crisis. And that's why we could still weather that. The point that he's making of 2003-04 is because the fundamentals of the economy were very strong when there was a change of government in 2004, and that the Economic Survey of India says it, which Mr. Chidambaram, as the then finance minister, acknowledged. And I'd like to just simply say the problem today is because it's a government at war with itself. Policy paralysis, there's no decision. Decisions are taken, retracted, changed. The sentiments are poor, as Mr. Mahajan pointed out. It doesn't take anything to understand. With a Vodafone case, with 2G scam, with another coal scam, with the kind of scam, sentiments are low. And in spite of all this, there are 1,000 areas that the government could have taken decisions on where it does not require Parliament and where it does not even require consensus. They are just basically running of the government. So if a government that doesn't perform, how are you going to change things? That's basically the track record. So it can't be built on hope alone.
Right, Nalin. Point taken. Very brief reaction from you, sir.
Okay, I have 3 points. One, Mythili, you said China, you can't speak out. In America, they can speak out, and they speak out positively. Number 2, Indians are investing overseas. We invested $5 billion in the US last year. And if we improve the sentiments, we will start to see investments not going out of here, but remaining here. Number 3, I think it's very important that all of us try to be positive about what we're trying to do instead of killing ourselves.
Right. Mythili, you have about 10 to 15 seconds. I want to give the last word on the show to you.
No, basically, it's just a question, which comes first, the chicken or the egg? Do we improve sentiment and does investment follow? Or do things happen on the ground and then does better investment follow? I think there's a bit of both. So it would be, I think, a little naive to say that, let's think everything is hunky-dory and automatically everything will fall in place. We have to walk the talk, and only then will you see investment climate improve.
On that note, I must thank all my guests. Dr. Santosh Mehrotra, thank you so much for joining us. Nalin as Kohli, Gautam Mahajan, as well as Mythili bhusnurmath. Like Mythili said, I think that was the key takeaway tonight. It is a long haul. It is not going to happen overnight. Of course, the government and everyone else connected has to keep working towards it to revive growth, to bring down inflation, to get private investment back. That's all the time we have on The Big Picture tonight. Athar Khan saying goodbye, good night, and thank you for watching.